Hello again, everyone. It is Wes with Pikes Peak Trades, and want to give you a little bit longer weekend video this time. Want to start by reviewing what I had talked about last weekend, and then go into more time frames, a little bit more variety, and talk about how I think we have a setup here for some very clear invalidation levels on helping us distinguish what could be the beginning of a fresh bullish impulse versus what might just be a bear market rally that could continue a little bit more into this next week of January. But eventually, I'll try to explain how we can kind of distinguish and decipher out those possibilities. Okay, so we're looking first at the QQQ 15-minute, and this was the focus of last week's video. And I had talked about a trading plan using this 15-minute video. If we could get up and out of this potential inverse head and shoulder neckline, and we gapped up right at the open Tuesday morning. It was a suspicious looking doji candle. And then the next 15-minute candle, when I had explained I'd be looking for a back test that held, that failed. And there was no reason at all to be thinking that you should be getting long. In fact, off of that failure at this point, you're kind of looking to short. And then we found support at what ended up being another lower diagonal. You're going to see that that held consistently across other ETFs. Obviously, it failed here later in the week on QQQ. So part of what I want to explain in this video is how I think it is best for you to be using multiple ETFs, some market-wide confluence for your decision making. And then we saw just a really frustrating kind of bottom to top move. Now, for active day traders that figured out that we were just ping-ponging here in between a range, there were tons of opportunity. There was no opportunity for a sustaining move that held until we got into Friday. And so I would explain here in using, I'm going to use everything that I track. So IWM, DIA, and SPX, why there were two great opportunities to get long on Friday. Okay, so let me try to now distill out where I think we're at in these counts using the cues that set a new low right at the end of December and then had a double bottom test. So it is the earliest by far within any potential bullish progression. So if you're thinking for any reason that you have already missed out on something significant to the upside, that is just simply not true. Looking at big tech here on the daily, I mean, look how close it is here to the October low that had a potential 0.886 fib. We're nowhere close to even getting anything near to a breakout in big tech, which we know is so heavily weighted in the major indices. Now, we'll contrast that here in a little bit with the industrials, with DIA, which has a very different look than Qs. So what I'm trying to say is, if we are in fact at the initial stages of a fresh bull market, we are far from even number one, being able to confirm it, and number two, even feeling like you're missing out on some of the best entries, which I'll try to explain would be coming up here into the future. All that we saw so far on Friday's intraday rally just put us back into potentially just a bear rally area. Now, even with that said, I don't think we're quite done. So the way that I would use QQQ off of that December low would be as a three-wave move up, ABC, a three-wave move down, ABC. And so then that's kind of demanding here, for the symmetry of this double zigzag, another three-wave move up into a more typical bearish zone. So my projection and my plan for early this week is for weakness, Monday, possibly even into Tuesday, then a rally out of it, even if it's only just part of a bear leg up into a more typical bearish zone. Now, I'm going to explain when I get into IWM what this blue count is, that this could be a count that just sets a marginal new bear market low for both IWM and QQQ, but then the expectation would be that SPX DIA just set a higher low before we actually finish this bear market. Okay, now for the bullish perspective, I think it's going to be better for me to show you how I'm using IWM and DIA to give me some more clear looks. But I'm going to look, as I'm going to explain, market-wide for confluence for what I'm looking for. Okay, so let me show you how that's going to look on the SPX short term, and then I'll talk about how I think we would have known on Friday that it was a bear trap that we needed to be long. So on SPX here, excuse me, you're going to see this wedging action from Thursday, December 22nd, when this low was set on everything except the Qs into what I am counting here as either it's going to be a leading diagonal 1-2 into a 1-2, which is going to give us a very clear invalidation level for any bull move. Okay, because what we know is internally within a higher degree 3, you cannot have a wave 4 that trades into wave 1. And you're going to see this consistently across all the upcoming short-term charts. I think the invalidation level is the Thursday, January 5th afternoon high. If that breaks, I think we have invalidation of any bull impulse, and we are looking then for fresh lows. Okay, so that's the very clear level. It's 38.30 here on SPX. Now, for continuation, either within a bear market rally, a wave B, and I'll show you that on the daily, that would simply lead here for SPX to work to a lower fib against the bear market low, or the most bearish scenario, that this is a bearish 1, 2, looking ahead to a 3 down. The invalidation level is the same regardless, 38.30. Okay, so for all the versions of these counts, I'm expecting early weakness on Monday. So this is going to put it just right back into a back testing area of this potential neckline breakout. We already saw that tested intraday on Friday. So 2 places to get long. Although Qs had broken by Friday morning their lower diagonal, SPX had not. So why would you think that you would be wanting to get short until we actually get confirmation of it? This initial candle, absolutely a bull trap, but when it held Thursday's low and then it did not break the channel, this was the signal to get long. So I'm always using multiple pieces of evidence for some confluence. Now, even if you had missed that, there was another flagging opportunity right against this short-term test that would have given you here 40 SPX points worth to trade. You'll see it again when I show you IWM and DIA. So my initial plan, like I said, I'm looking for early weakness. I'm looking for a testing area back into where we tested and already moved off of on Friday, and then some continuation up, either to finish into a more typical bearish fib zone, or if at that point pullbacks are shallow and repeatedly bought, we're fleshing out what looks to me to be the start of a new bullish impulse. Okay, so let's see what that would look like on DIA. So DIA, it has the same short-term bearish count as SPX, that we could be looking at an ABC down to simply a more typical higher low fib Into the short term, you're going to see, again, what I just showed you on SPX. You would not have shorted because we did not get the confluence early Friday of a full breakdown. We did not break below Thursday's closing low. We had not lost this lower channel. This was the clue to get long, especially here against this neckline right there within the 10 to 10:15 candle. That was your get long area. Here was the second opportunity corresponding to a test of 5 previous areas that had been sold that then turned from supply into demand. So what I'm expecting this week is another test of that area. It's already been tested. So what that does mean, we have to be very, very careful that we slice through it and this turns into a leg C down. But again, it is the same invalidation point to confirm it is the Thursday late afternoon high that you see here that I've marked in blue. Okay, getting into IWM. Now here is where I'm going to talk about one set of an ETF on a longer term and offer for you the possibility of that significant low. I want you to notice how this bottoming area is very similar to what I have as the primary bottoming area off of the great financial crisis low. So I'm tracking in symmetry here that GFC low as a cycle 2, the COVID low as a cycle 4, and this is a P1, P2, P1, P2. So that is my bullish case here for small caps. Now, like DIA SPX, there is a short-term bearish count that is the same for QQQ, would create undercutting bear market lows. SPX DIA would hold above their bear market low in a higher low. And you're going to see as we move in through the weekly that there are some different ways that we would count it. Okay, so in the case of an undercutting low, I have this as a triple zigzag. So 3 down to an X, 3 down to a Y, to a second X. That's why it's a triple zigzag. And then another ABC down to finish that out. Now, that's going to be on the table if we lose the December 27 low. We lose that low, and we're thinking at that point that this, just like the Qs in an ABC as the last zigzag of the triple, would be a 1, 2, 3, 4 down. Okay, now, even with that count, we could still work higher into this proposed 4 zone. Okay, so I'm going to show you the more immediate result. If we have already in fact topped, your invalidation level is still the same. It is still the Thursday afternoon high, because from a bullish perspective, this would be a 1 to an expanded flat 2 to another 1, 2, a leading diagonal 1, 2, but we cannot have this 4 trade into this 1 within the degree 3. So I hope you're seeing it is clear across the board with these wave counts where we have invalidation. We trade here into 3830 SPX along with breaking 174.69 on IWM, along with breaking on DIA. That value is at 330.83. We break all of that, and we've got the confluence for me to say, I think we're going to new bear market lows in IWM, QQQ, and higher lows on SPX and DIA. Now, we hold that wave 4 area here. I think we've got the opportunity to trade long. Now, there is a little bit too much of a wiggle room here for a short-term trade stop. So I would be putting that stop here at the 0.382 fib if I'm looking to get long. I think that's a little more clear on DIA. So DIA is one of my primary areas of trading focus early in the week. If this projected pullback does in fact happen, but we lose here, this fib zone, I'm then worried that we've exhausted some short-term demand, and then I would be looking then to short on any test back into that area, anticipating that this does break for that lower low. Okay, so that's my plan for the week. I hope it's really clear to you where we have invalidation according to Elliott Wave. It is one of the best things I like about Elliott Wave is when you understand the internal rules and structure, it gives you very, very clear invalidation of one count versus another. So we'll see what we get. Now, the one thing that I didn't talk about, what if we gap up? So am I going to chase that into this area? Well, I don't know. That's going to be yet for me to try to decide market wide. There are open gaps from December that could close before we then pull back. But in general, if that happens, my plan to be a pullback buyer into fib zones is not happening. And at that point, I'm going to say it's a little bit more risky here for me to think that I want to chase. But we clearly do have upper fibs that have yet to be satisfied. All right, so that's the review of this week. Gave you a couple longer term glimpses on some daily charts and then the IWM monthly and weekly. And as always, we stick to our plan, but we're flexible. And so if we notice that we're needing to make some changes, then we are certainly flexible and not locked in to one thing. But let me finish here with that DIA, because that is my primary area of pullback buy focus, looking for that white count. All right, gang. So hope you have a wonderful weekend. Wish you all the best. And I think we're due for another week full of opportunities for trading.